Hi, this is CF Lieu from REITmethod.com. Now, in this video, I thought of giving you a walkthrough of what are the REIT stocks are there in Malaysia. So if you go to any brokerage, you have any brokerage account, you open your brokerage account and there should be a section where you can filter all those counters or stocks by its sector. And so when you filter the REIT sector, this is a snapshot of what you're going to get. So you can see that this REIT sector, it's a total of 17 or 18 REIT stocks there is. In case you didn't know what is REIT, what I'm talking about, REIT is a short form pronunciation for Real Estate Investment Trust. So I'm going to use the word REIT, and in this video, in this short fast track lesson, I'm going to use the word REIT stocks a lot, so that you don't confuse by what I'm saying. REIT refers to Real Estate Investment Trust. Now, if you go to any of your brokerage, it is filtered by sector, REIT sector, which is quite substantial number of stocks in that sector. You can see something like this is arranged in alphabetical order. Now, it's not very useful to have this display because you have no idea what is this, what are the exact REIT stock classification is about. You can only see the price and whatnot. So I'm going to show you another very good summary as a fast track lesson of what REIT stocks is about in Malaysia. What are the types of REIT stocks or counters are there in Malaysia? So in Malaysia, you have these five big categories, right? Others, meaning that there could be only one REIT stocks that have that classification. For example, we have Al-Akar KPJ REIT, which is a strictly healthcare REIT, and there's only one. Okay, that's why I group it under others. And the other thing is the other four main REIT stocks classification that you need to understand is this: retail REITs, office REITs, industrial REITs, and hospitality REIT. Hospitality doesn't mean a hospital, it means tourism, all the hotels and resorts and all that. So as you know, REIT are all about commercial properties. So if I say that this REIT has a retail asset, means that it holds a retail shopping malls as an underlying asset in its properties, as its underlying asset for retail assets. Now you can see that this table is a very good summary of what each REIT, what a type of asset each REITs hold. Now some REITs are very specified, very specific, very concentrated. For example, Al-Akar is a strictly healthcare REIT, but you have REIT like Amanah Raya and for example KLCC Staple REIT. These are the REIT stocks that have retail assets and office assets under it. So this is if you see any of those REIT stocks that have more than what I've labeled here, more than one of what I've labeled here, then in other words, we can call it as hybrid REIT stocks. Okay, now, so let's go through this list one by one. You see that Amanah Raya is a hybrid, M-First is a strictly office REIT, Atrium is strictly an industrial REIT, Axis is a mixture of office and industrial, although it's heavy in industrial assets. KIP is a retail asset. So retail asset, you see that like KIP REIT, they are more of the retail, like your neighborhood markets and shopping mall, as compared to, for example, KLCC. These are the assets, the retail assets that is holding, as a KLCC, the shopping mall. So these are in the city center, in what we call the central business district. These are more of your neighborhood assets, or when it comes to retail assets. So retail assets, although this is a first level of classification, but they are might be a mini level of classification when it comes to the type of assets. Like for example, retail asset would be in big cities and could be divided into neighborhood malls. So I'll go through this list very fast. MRCB, Quail Rate, they have again hybrid asset. Tower is a strictly office asset. Al Salam is again is by Johor Corporation. Most assets are very concentrated in Johor. Most of these REITs, the assets are in city center, but you can see that some are actually not in the KL or city center. It is in cities across Malaysia. So YTL, it's strictly hospitality asset, which is overseas and also in Malaysia. UOA is an office assets REITs. Capital Malls, Sunway, Pavilion, IGB, all these REIT stocks hold retail assets, but in addition, Sunway REIT and Pavilion REIT also hold office asset as well. But their majority, they are heavy in this retail asset. That's why it's called, you can classify as a hybrid REIT. You can also classify them as retail REIT stocks. Now, I want to give you a walkthrough of what are the big classification of a REIT stocks in Malaysia and what are the characteristics. Now, the characteristic when it comes to industrial REIT stocks is the fact that the industrial property, we are normally referring to factory, warehouse, logistics center, and all that. And the good thing about REIT stocks, industrial REIT stock like Atrium and Axis REIT, is that it's less lumpy, meaning it's very nimble. So the fund manager can, if they spot a good opportunity, they can buy that warehouse and inject into their property portfolio, as compared to, for example, retail shopping mall. You can't really buy a retail shopping mall like so easily compared to like one logistics center or one warehouse, which is what I mean by less lumpy and it's more nimble. Triple net lease is something you might want to also understand, is that the property expenses normally are bear by the REIT manager, but for triple net lease, things like your utilities and whatnot, there are these assessment or quick rent and all that, they are bear by the tenant. So any REITs, again, it depends on the characteristic. It so happens that industrial REIT, they have a characteristic whereby it has a triple net lease. That is how things work. The three major property expenses are actually borne by the tenant instead of the REIT manager itself. So if industrial REIT, your tenant is more of the MNC multinational company, then that kind of industrial REIT stock are more resilient because your rentals are more stable compared to you're renting that out to a small medium enterprise. It's very growth driven, acquisition driven for any industrial REIT because it's less lumpy. Now let's jump into retail REITs. Okay, retail REIT stocks, as you know, you can IGB, Hector, Capital Malls, Pavilion, Al Salam, and some of those are not listed here. Retail REIT stocks, they hold shopping malls, and it's all about location. So again, you can't really buy too many shopping malls. They're not because it's big and it's very expensive. So how the strategy for a REIT manager to actually generate more income for a retail REIT is actually a lot of times through asset enhancement initiative, whereby they enlarge the area, they do expansion, they rotate the tenants who can pay them higher and all that. But that comes to if the location of your assets, your retail mall for REIT stock is in prime location like city center and all that, or in Petaling Jaya in Malaysia and all that. So it's very important. For example, IGB, they hold the Mid Valley, Pavilion, they hold all these are in city center, compared to Hector, which they hold these retail malls in smaller cities like Malacca and all that. Capital Malls is still in Selangor and KL, but their location of their properties are not in prime area like the mines, Sungai Wang and all that, because they are more better, what we call as better so-called retail malls that is surrounding them. So when you want to buy any retail REIT stock, so just consider this factor. Normally for retail REIT stocks, they are quite resilient because the tenants are very sticky. If they are actually doing business, they don't want to move. But one thing that you want to know is that with the emergence of e-commerce, these REIT property manager who are managing retail assets, they are actually now transforming that into a lifestyle center, no longer, strictly a retail. When I say retail, people nowadays don't really buy much things from retail malls anymore. If they can, they will compare prices online and buy online. So REIT manager will also evolve accordingly in terms of how they are branding, or they are actually amending or renovating their assets, their shopping mall as a family center for weekends and all stuff like that. So asset enhancement, again, like I say, asset enhancement, if you enlarge your lettable area, your expansion, then you generate more income for that. So again, it's defensive. Normally it's very defensive, but just take note on the emergence of e-commerce, and you know that retail malls, they are very easy to evaluate. You can actually walk into any retail malls. If you invest in any retail REIT stocks, then you can know that you can actually do a property inspection on the assets that you're investing in. Now, healthcare REIT, okay, there's only one healthcare REIT in Malaysia, which is Al-Aka, and this would be the most defensive. And it, like industrial REIT, this is also on a triple net list, meaning that the tenants, instead of the property manager or the REIT manager, bond all the property taxes, building insurance and maintenance and repair costs. So again, this is the most resilient, even more resilient than retail REITs, because healthcare REIT, it's a bit like a basic necessity. They hold all the private hospitals and all that, Al-Aka, KPJ hospital. So people go to hospital is like a need, because when people get sick, they will surely go to the hospital. If they can afford it, they will go to private hospital. So again, the Al-Aka REIT, when we do a healthcare REIT is very high barrier of entry. Not everyone can actually get it listed in the stock exchange, a healthcare REIT, because how many hospital groups are there nowadays, right? So medical, again, like I mentioned, very resilient, because medical expenses are non-discretionary expenses. Moving on to REIT stocks, office REIT stocks, or the categorized as holding the office assets. Now, office assets, as you know, it's when it comes to commercial property, is relatively easy to build. So there's a lot of this oversupply when it comes to this REIT. Tower REIT, UOA, and Emphas, all of these retail REIT stocks are having oversupply, meaning that their rental rate are actually having a downward pressure. So they don't have much negotiation power. Tenants can just easily move their office elsewhere. So be very, very careful when you want to buy any office REIT stocks, because you will have to consider if the offices must have a prime grade A offices, not old offices, because old offices, tenants just maybe they'll move away and all that. I say offices are like offices assets are like a commodity nowadays. It's all about location, and what the kind of tenants that you are able to bring in to rent and give you rental income. So offices, if you have a better choice when it comes to healthcare, retail, and industrial REIT, I would suggest you avoid offices or REIT stocks that have the underlying assets in offices, most as the majority, or they are heavy in office assets. So avoid those REIT stocks if you can. Now, the last thing is about hospitality assets. Like I say, hospitality is about REIT stocks that hold hotels, resorts, and all that. The one hospitality REIT stocks available in Malaysia is by YTL. So there is another of a very cyclical kind of sector, a kind of asset, because tourism, retail, it depends on whether there are people travel and go for leisure travel and all that. So all those assets under a hospitality REIT stock must be in cities where people would travel to, where tourists are flocking to. If not, you wouldn't have a business. If you have hotels in like small cities where there's no attraction, there's no tour, the tourism business is not really booming. Therefore, you must be also very careful. But for YTL Hospitality REIT, they already have that kind of branding, they already have that kind of positioning, whereby this is less of a worry. The only worry when you invest in hospitality REIT stocks in Malaysia, namely YTL Hospitality REIT, is the fact that they might be subject to some foreign exchange risk, because some or majority of the properties, maybe more than half, are based overseas. And when there is any like outbreak, epidemic, like SARS, outbreak of disease, you will see the tourism revenue, tourism sector will be affected. Then that might be affecting what is the rental revenue generated by a hospitality REIT stocks, or any REIT that hosts hotels, resorts, and all that. So with that, I hope this is a very good fast track lesson, a guide to you starting to invest into REIT stocks in Malaysia. Let's come back to here. These are all the REIT stock, and it's not very useful. I've categorized it under this 4 or 5 big category of REIT stocks in Malaysia. So with that being said, the final thing before we wrap is that if you want to check out our REIT investing course, a full-fledged REIT investing course where I talk more about what I've shared with you in this video, head on, click on the link, look at the link. There's a link below this video where we can click on that and get your free email course on REIT investing. It's totally free, so you just click on that, enter your name and email, and you'll be on your way to a successful REIT investing, which can easily give you double or even triple the rate of fixed deposit rate dividends consistently every year. Why? Well, you have to follow this channel because you will get more lessons like this on REIT investing. And we'll talk about why the REIT investing, the dividends from REIT are so consistent, give you double or triple the rate of your fixed deposit consistently every year. Why is able to deliver that? What is the logic behind that? So do hit subscribe so you get notified when I publish new lesson like this. Also hit on the notification button. Okay, hit subscribe and go to the link below this video where you will get a free REIT investing email course sent to you over the next, I think, next 3 or 4 weeks, absolutely free. Okay, this is Lieu from REIT Method. I'll see you in another lesson.